the reason I'm so passionate about talking about this is because this could literally change the trajectory of your business because it allows you to have predictable margins. If there is anything that I would encourage a business owner to do most is to do a pricing analysis to make sure they're actually making the money they think they are. Hello. So today we are going to talk about the most common cash leak most business owners may experience in their entrepreneurial journey, and that is pricing. So this is one of those topics that a lot of business owners don't want to talk about, specifically if they're in the business of helping people, because it feels, it causes a little friction. Sometimes it feels a little sticky to talk about pricing because often when entrepreneurs come up with their pricing, they will do it based on the market, what other people are doing, what somebody tells them they should do. But in reality, they really need to be more strategic about it because it is one of the most common cash leaks that business owners experience, and they don't even know that it's happening. And why is that? Because often when they price, they do not account for what it costs them to turn the lights on every day. And so the reason I am so passionate about talking about this is because this could literally change the trajectory of your business because it allows you to have predictable margins. If there is anything that I would encourage a business owner to do most is to do a pricing analysis to make sure they're actually making the money they think they are. So what I have seen over the years is that most business owners price based on the market or direct cost of doing the service or providing the product, right? So they do it based on cost and then add a little margin to it. But what they're not accounting for is this thing called overhead. So overhead is basically the cost of turning the lights on every day. It's all those things that you can't directly point back to generating that revenue. It's things like having your website hosted. It's those things such as literally paying the rent if you have a brick and mortar space or you rent a space for your online business. It is those types of expenses. It could be your payroll expense, depending on how you pay yourself and what your tax election is, right? So those are the costs we're talking about that we're not factoring into the equation. And there's a very simple way to do this. And so we're going to go over that today. But I also want to encourage you that even if you do this price analysis and you're totally off base, you had no idea, and you need to change your prices, just remember you don't have to change all of them at once. And you don't necessarily have to change prices for your existing customers, depending on their lifetime value. Or, you can do it, but you could do it $5 at a time versus $25 or $150, whatever the case may be, because I have literally seen it all. It could be one of those things that you start with new customers, new patients, whoever is first coming in and getting to know what you offer and your price point. So just know that no matter where you're at and no matter what this analysis reveals, you have the authority and you should take yourself up on it to figure out how to do this well within the confines of your business. And so I kind of am just writing that permission slip for you today. I know sometimes it's easier to just not do anything about it and just not know. But today we're not only going to learn how to do this and figure out how this works for you, but then how to actually strategically raise your prices from there. So first, I want you to open up your accounting software, whether it be QuickBooks, Xero, whatever. And I want you to go to the profit and loss statement. So depending on how long your business has been around will depend on the range I want the income statement to look like. But if you go to and just for anybody who is new, income statement, profit and loss, same. It shows your revenue, your expenses, and then your net income. But depending on your business is depending on what it's called. And people kind of just call them interchangeably. So I don't want that confusion to stop you from doing this activity. So go into your accounting software, go pull up your profit and loss. And if you want to, you can do it for the last 6 months, the last year, the last 2 years to see where you're at. The reason I want you to change that range is because depending on how your business has grown, scaled, what the environment is like, it may make sense to do it over 2 years for you because there's so much variability. It could make sense that you just, left your full-time job. You're now full into your business. So the last 6 months might be more telling and last year might be more telling. However you do it, I would suggest that you strategically think about it and what makes sense for your business. Then from there, I want you to, at the very top, I can only really speak to QuickBooks, so just trek with me. You can get a percentage, which is basically your expenses as it relates to income. And so you want to get that percentage. That's that bottom line expense. And that percentage is what you apply for every dollar of revenue you have, every dollar of income you have. And that percentage is basically saying that every time you collect $1, you're paying that much into your overhead expenses. So for example, for the sake of keeping it simple, say that number is 50%. When you make $100, 50% of $100 is $50. 50 of that's going to overhead, but it costs you $25 to actually make that $100. So altogether, you're only collecting, you'll collect the whole $100, but you're only keeping 25 of that $100. And that is your net income or your net margin. And so that's what I want you to do for every single one of your services, packages, whatever. This is very revealing because oftentimes people have no margin at the end of it. Sometimes they have negative margin or they have much less than what they have anticipated. What I would encourage you to do is really sit down with your business and figure out benchmark wise based on the type of work you do and the service you provide and or product you provide, what is normal in your industry for profit and try to hit that benchmark. And that should be that net dollar amount, that net percentage at the very end. Don't let the math scare you. I really want to encourage you. If you can't do this on your own, get with a professional that can help you do this. If this is starting to feel like overwhelming, this is when we get on a call, we have a conversation, we hire the expert that does this all the time. Because the thing about it, when you work with Thorn or anybody else in our space that work and focus on cash flow, is our goal is to make this super simple for you, but you also get another brain to work alongside you. With Thorn, when you onboard doing cash flow services, we sit with you and we understand that customer journey end to end. We understand where and how you source your products, how you come up with your pricing, how you end up paying your employees and all of that jazz. So we're able to walk alongside you and understand where you can actually strategically leverage some of this. Sometimes it's cutting costs. Sometimes it's raising your prices. Sometimes it's doing both. And so what I really want to encourage you today is don't let the numbers scare you. Let them be data. Let them tell you that there is something that needs to be addressed. Let them tell you that there's something you get to do, because I really want you to know that you're not greedy by asking for more money. You're asking for more money in order to have a bigger impact. If you want to turn the lights on tomorrow, you have to have the net margin to be able to do that, to be able to pay yourself well, to be able to pay your employees well. So don't look at this as like, oh, it's just a money grab. This is very purposeful and really revealing process. So if you are interested in additional cash flow support, please reach out to me. We have a discovery call in the show notes, and I would love to hop on and understand what your need is and how I can show up for you. And this is just one of the 5 cash leaks we are going to be diving into in this podcast. So stick around, check us out. Listen, these are short, sweet, but super powerful and impactful episodes that you can then go take action on. So if you are feeling encouraged, if you are ready to look at the numbers, I suggest you go and do it.